We are less than 3 weeks away from Union Budget 2019. For those of you who are unaware, the government had presented an interim budget earlier this year. The upcoming budget could be interesting for mutual fund investors. We have with us Certified Financial Planner Jitendra Solanki to talk about the same and more. So before we move on to this year's budget, in the last full budget, the government had introduced LTCG. How has that impacted mutual fund investors?
See, before LTCG was introduced, so all equity taxation was not there. So investor was like, anything you earn on your investment was tax free. Whether it's for one year, more than 1 year, or more than 5 years. But with introduction of LTCG tax, now there has been, especially for the investors, they are hesitant to redeem their money if it is getting into taxation. Now, if you look at it, there is a certain exemption provided. That it is within 1 lakh of capital gains, it is going to be tax free. So I think what investors are doing, either they are not redeeming it, or if they are redeeming it, they are redeeming it in phases, so that their capital gains does not become taxable. So that way tax is being deferred. Now if you look at the impact, so you can say the impact, the redemption is being deferred. So we have seen less redemption happening due to this taxation aspect. The other aspect remains same, but I think because of this taxation aspect, either the redemption are happening less, or the redemption have not been happening, the tax is being deferred.
Now, as you mentioned that people have been more reluctant to withdraw their money after this the LTCG was implemented, and in fact the move overall got a mixed response from the investors as well as the industry. So do you see that changing with the coming budget?
I don't think suddenly the government is going to change in a span of 1 year, going to change this LTCG taxation, because it was introduced last year and it has been only 1 year, right? The impact is yet to be seen. So for government, the taxation cannot be changed every year. So I don't see the LTCG taxation being changed this year. And anything government would not like to change so frequently the taxation structure which they have recently bring it down in the budget.
But for all we know, this government is full of surprises. They can, just when you think that they cannot come up with something new, they come up with a scheme that completely blows you apart.
Yes, that is there, because the government, it has been a remandate for the government. They have come again for the next 5 years. So there are a lot of wishes from investors. Investors are hopeful something will come up, right? And government may throw surprise on this aspect also. But if you look at our personal view, whether there is going to be change in LTCG taxation with respect to what has been done in the last budget, I don't think they will change that. They might bring some other soaps, they might maybe increasing the exemption limit from 1 lakh to 2 lakh. That might happen. But the taxation structure, I don't see there is going to be any changes.
Now, another major issue that was with the LTCG was that while the ULIPs are tax-free, the government had decided to put LTCG on mutual funds, which sort of created a unparalleled playing field, which the industry believes has happened. So, do you think anything changing in that regard to bring both the schemes at par?
Yes, I think if you look at today what is the structure of ULIP and what is the structure of mutual fund. So mutual funds are at a disadvantage when it comes to switching between the funds, switching between the schemes. If you look at ULIPs, you can make 5 switches in a free within equity to debt within the same scheme. So there is a lot of tax advantage in the ULIP structure. There has been a strong demand from the industry that mutual funds should be made at par with ULIPs. The taxation structure should be uniform within all capital market segment. So yes, from the if that demands goes well with the government might change in the ULIP structure, or in the mutual fund structure, and bring a parity between these two kind of investments.
Now this was all about what happened in the last budget. What is the mutual fund industry expecting from the government in this budget?
Okay, so there has been very few demands from the mutual fund industry. First of all, if you look at, then all the benefits on the taxation front is there in the equity segment. There is no benefit in the debt segment. So what happens to the conservative investors? So if you look at ELSS scheme, equity linked savings scheme, now that is only available in equity. But if a conservative investor wants to have the same scheme from mutual fund, so there was a strong demand that you bring a debt linked savings scheme in the budget also. The second demand has been there in the mutual fund industry that you bring a retirement plan. You have in US like 401k plan, where the contribution is made by the employer, and it is all completely the retirement benefit. So there has been a strong demand from the mutual fund industry that you bring the same plan within the mutual fund product. As of now, whatever retirement plans are there, they are not very attractive, and you don't have much of incentive there. So that is the second demand from the mutual fund industry, that you also bring these retirement plans. And the third demand has been there, that you bring a parity between ULIPs and mutual fund. So much like in ULIPs, you have all the switches free, right? You may get 5 switches free of cost. So similarly, the mutual fund industry should have these switches available. So if I, as an investor, I am switching within the same company from one scheme to other scheme, there should not be any capital gain taxation. So I think these are 2 or 3 demands for the strong demand on the mutual fund industry, which can bring good amount of investors to the industry, and may do good for the mutual fund industry.
I mean, that's a very valid point. The first point that you made about the debt schemes, because equity investors are anyway aggressive investors. They make more money than the. General belief is that they get better returns than the debt investors, and they can actually save on tax while the debt investors can't. The conservative investors. That's a very, very good point to be made. Now, there has also been a lot of talk about changing the income tax slabs. Even Piyush Goyal, who was the then interim finance minister after the last budget, said that the government was actually considering this, but given that it was an interim budget, they didn't go for it. Now, if there is a change in the tax slabs, do you think more cash in hand will help mutual fund industry?
Yes, see, if more cash comes in the hand of investors, so more money will come into mutual fund industry. We are already seeing there is a shift from physical asset to these financial assets. So the money is coming out from the real estate and coming to the mutual fund industry. So there has been a strong inflow. Now, if more disposable income comes in the hand of investors, you can expect more inflows coming into this industry. Barring whatever issues going on, but as far as equity is concerned, you will see strong inflows coming in. So yes, if it does, there is a change in a income tax slab and more money comes into the hand of investor, you can see more money flowing into the mutual fund. But the question is whether really the government will make changes in the income tax slab, knowing that they have already done in the interim budget. If you look at interim budget, almost up till 6 lakh, there is no taxation coming for the individuals. So changing in income tax slab means going ahead beyond the 6 lakh slab. So that is the one question, whether the income tax slab changes. But yes, if it does, more money comes in the hand of investors, there's going to be strong inflows in the industry also.
Okay. Now, sir, lastly, from what we saw in the first tenure of the Modi government, there was a lot of focus on infrastructure. And if that approach continues, do you see infra mutual funds getting the benefit of that?
Yes, I personally believe that with new government coming in, and the Modi government has been a very strong focus on consumption and investment. Now, if you look at consumption and investment, then the biggest boost to the infrastructure sector. We have already seen so much of projects, so much of infrastructure development which is taken in the last 5 years. And in the next 5 years, more or less, the gestation period would be over for some of these projects. So yes, with these kind of thrust given on infrastructure sector, you might see a performance from the infrastructure funds, or the funds linked to these sectors being getting better into the next 5 years.
Whenever there is a stable government, we see most sectors of the country flourishing, and this is exactly what has happened with the Modi government returning to power. This is all what mutual fund industry expects from Union Budget. Keep following zeebiz.com for more such videos.